Welcome back to This Week in Finance. I'm your host, Ether.
And I'm Bit. It's great to be with you all during what has been a very eventful week.
Bit, it might not be an exaggeration to say that this past week was a nightmare for investors in the U.S. stock market. A sea of red seemed to cover everything. Could you start by outlining the scale of this downturn for us?
Absolutely, Ether. Nightmare is a very accurate word for it. We witnessed a fierce sell-off. The Dow Jones Industrial Average, DJIA, alone fell sharply, losing 2,200 points in just 2 trading days. That figure is equivalent to about $3.25 trillion in market capitalization that simply evaporated. The index closed the week around the 41,500 point mark after hitting a low of 40,800 points at one point.
A truly staggering decline. What about the other major indices, like the S&P 500 and the Nasdaq? Was it a similar story?
It was exactly the same story. The S&P 500, which is the benchmark for 500 of the largest companies, saw a decline of between 1.46% and 4% for the week and experienced its worst trading session since September 2022. The index traded in a wide range between 5,400 and 5,600 points, closing the week around 5,450 points. Meanwhile, the tech-heavy Nasdaq composite also had a shocking session with a 4% drop, primarily due to selling pressure from large-cap tech stocks like Nvidia and Apple.
You just mentioned the tech sector. Could you dive deeper into specific industries? Which sectors were hit the hardest? And were there any surprising bright spots?
The tech sector, especially the FANG stocks, Meta, Apple, Amazon, Netflix, Google, fell sharply in unison. However, amidst that bleak picture, a surprising name emerged, K-Wave Media, which soared an incredible 160% following an announcement of a $500 million share acquisition. Additionally, the banking sector showed mixed performance. Large banks like JP Morgan were quite stable, while smaller banks came under pressure due to recession fears. Even commodities were affected. The price of gold fell from $2,650 per ounce to $2,590, dragging down gold-related stocks with it.
It's clear this was a broad-based decline. Let's dissect the root causes. What factors are weighing so heavily on market sentiment right now?
The biggest and most immediate factor is trade policy. Statements from President Trump regarding reciprocal tariffs on China and other partners have sparked fears of a full-blown trade war. When Beijing responded with threats of retaliation, the pressure on stocks with significant export activities intensified.
In that context, what has the U.S. Federal Reserve stance been?
Absolutely. The economic data was like adding fuel to the fire. The ADP jobs report showed that only 37,000 new jobs were created, much lower than the 50,000 expected. This figure, combined with a forecast for lower GDP, significantly increased concerns about a recession. Right now, all eyes are on the upcoming CPI and PPI data, which will be crucial in determining the market's next move.
In that context, what has the U.S. Federal Reserve stance been, Bit?
The Fed is in a difficult position. The market expects them to hold interest rates steady at the 4.75% to 5% level. However, recent hawkish comments from Chairman Jerome Powell could add more pressure. Notably, the Treasury yield curve remains inverted, which is a classic signal of recession risk. All of this has caused the Fear and Greed Index to drop to a level of 17, indicating extreme caution among investors.
That's a very detailed picture of the stock market. Now let's shift to another market of great interest, cryptocurrency. While stocks were in a bloodbath, how did Bitcoin perform?
This is where the week's interesting divergence occurs. Compared to the chaos in stocks, Bitcoin appeared much more resilient. The price of Bitcoin did fall slightly by about 3% for the week, closing around $104,696.04. It traded within a fairly tight consolidation range between $101,000 and $106,900, after having reached a peak of $112,000 in late May. This sideways movement suggests the market is digesting the previous strong rally rather than panic selling.
What helped Bitcoin maintain this relative stability?
There are two main conflicting forces at play. On the positive side, Trump's policies, especially the executive order to establish a strategic Bitcoin reserve, continue to support long-term confidence. The flow of funds from large institutions is also a critical pillar of support. Most notably, MicroStrategy purchased an additional 53,396 BTC, bringing their total holdings to a staggering 580,000 BTC. However, on the other side, delays in implementing the executive order and litigation costs with the SEC have created downward pressure. Inflows into ETFs have also been inconsistent. There were days with net inflows of $433 million, but also sessions with net outflows of $346.8 million.
And what about other altcoins? Did they follow Bitcoin's stability?
Unfortunately, no. The altcoin market came under much stronger pressure. The total crypto market capitalization fell from $2.2 trillion to $2.1 trillion. Ethereum, ETH, the largest altcoin, fell by 3% and traded in a range of 2450 to 2681.48. Solana, SOL, was the biggest loser among the major coins, losing a sharp 24% of its value, as it fell from 187 to just 141. However, there were individual bright spots, such as Ripple, XRP, which gained 3 to 7%, and meme coins related to Trump, which rose by 12%.
So there's a significant divergence there. To sum up, what are your forecasts and outlook for the coming week and beyond?
In the short term, the tug-of-war will continue. For the S&P 500, the 5,350 to 5,600 point range is the main battlefield. If the CPI data comes in poor, the 5,300 level could be tested. Conversely, a dovish signal from the Fed could help the index head back towards the previous high of 5,700 points. For Bitcoin, the battle will be fought around the $100,000 mark. Losing this level could push the price down to 98,000, but if it can break through the resistance at 106,900, the path to $112,000 will be wide open.
Finally, what would be your advice to investors at this time?
Buckle up. The biggest risks are still present: a potential trade war, persistent inflation, and regulatory actions. This past week has shown that Bitcoin can act as a relative safe haven compared to stocks, but nothing is absolute. Diversifying your portfolio and keeping a level head is the wisest strategy right now.
Well, thank you very much for your incredibly detailed and insightful analysis, Bit. I hope our audience now has a comprehensive and multifaceted view of the market.
Thank you, Ether, and thank you to our listeners.
That concludes this episode of This Week in Finance. Thank you for tuning in. Goodbye, and see you next time.